Antofagasta, Anglo American, BHP Billiton and Glencore all rose after minutes of the US Federal Reserve's July policy meeting showed that policymakers were divided over whether to raise interest rates soon. But this is just a slice of light relief, really, for an industry embattled by a lack of demand, oversupply, and of course there's a debt issue as well. But it's not all doom and gloom, because some sectors are doing very well indeed. Leroy Lawrence from Quadron Capital is here with me now for talking on miners, more on miners with you. Should we start with the ugly?
Sure.
Yeah, let's go for that, because probably BHP Billiton, what a terrible time of it.
Yeah, well, most of it's ugly at the moment. Anywhere that's really reliant on miners is struggling. Lots of jobs have been going in Australia, especially Northern Australia. And throughout the back end of last year, we've seen base metal prices pretty much collapse and keep going so far. We are seeing that kind of base level of price now, where we think they may well be looking to rebound. The IMF are predicting up until the end of next year we will start seeing we'll continue to see a kind of gentle increase in price of those metals, which means that your BHP Billitons, your Rio Tintos can look to invest more into mining those kind of products.
It's not all bad though, is it? Because we've done the ugly. What about the pretty? Because if you're talking about mining, gold and silver play into this as well. Well, they're doing brilliantly. Sure,
gold has recovered back up to around 1200 again. Silver's not done too badly either, but it's always trying to find new supplies and find new markets that are offering gold as well, and trying to one of the things with mining right now is that information has increased a lot, the transmission information, which means you see ups and downs and dips in much shorter time frames, which weren't there in the past. We used to look at mining as a very kind of a fundamental analysis type thing to look at, whereas now we're seeing data move very quickly. We're seeing lots of online trading happening as well, which means we get a much more thorough understanding of the way the market's moving, and it reacts much quicker to news as it comes out.
Okay, and if you are heavily exposed to mining, what can you do? I mean, okay, I've mentioned patience, but where would you put yourself? How would you place your portfolio? Because do you think there's still money to be made in gold?
I wouldn't be looking to. I mean, people are placing into gold because they're concerned about the economy with Brexit and everything else right now. I hate to mention Brexit again for the millionth time, but they are. If you're looking at a special part of the market to move away from and move into, you'd move from oil, which we think is going to have a long-term negative trend.
Oh, really?
And you'd move into base metals, which I think is going to have not a massive increase, but still a gentle upward turn for the next 18 months. And that's where you'd be looking to readjust. But there'll be peaks and troughs, so you can take your time as you do it. There's no need to make a kind of emergency break on anything. You can move partially from one to the other, but definitely we'll be moving out of oil and into base metals long term.
Okay, interesting. And with oil, do you think that it's going to stay around $40 a barrel there for quite some time?
I think it'll keep falling.
Really?
Yeah, I think it will keep falling. We're seeing quite big cyclical movements in oil prices, but they're going to keep falling down, we think, at the moment. So
you're not confident that OPEC are going to do anything in September then?
They never do.
That's very true.
We've discussed it before, yeah, they never do.
Okay, so mining, you think, what, 18 months, we're looking at a prettier picture?
Yeah, definitely.
Okay, Leroy Lawrence, thank you very much indeed from Quadron Capital. Okay, so get away from oil and get yourself in mining, but do it with a bit of patience.